Yeah, hello, good day. My name is Prezemi Kasali. Today we'll be looking into Sarai and we'll be looking into crypto trading, making use of Sarai bot. We are not going to just be doing this. We're going to be looking into a more technical way of trading with Sarai. Sarai is automated, like very, very automated. It's everything about it is automated, like select coins by itself, takes profit by itself. What else again? Even accept applied what do we call it, stop loss by itself. So what else? But there is just one thing we can do manually, and it is called the CA, that is dollar cost average. I call it average cost pricing. I'm not using this as for more illustrative ways. Average, like you costs the price. Make it average. Like okay, let me explain. Okay, now we have assuming you bought a bag of rice at 50,000, 50K, and that bag of rice, you want to sell it at 60K, or let me say 55K, that's 10%. But at the long run, this bag of rice becomes 25K in the market. So you cannot sell yours at 55K when others will be selling it at probably 27.5K, that kind of a thing. So all you just need to do is to buy more of these. Probably when you buy 10 of these, 10 of these, okay, or 4 of these, let's say 4 of these. So if you buy 4 of these, that simply means you have 100. Then plus this, that is plus 50. So you have 150 for 5. So when you divide 150 by 5, that is 30. So that simply means that you now have it at 30K. So, and instead of you to wait for the price to come back to 50K, you are only waiting for the bag of rice to come to 30K. And that is exactly what we are doing in this advanced class. This is for traders. We did a video. We said it is for investors. And I told you in that video, I said there is nothing like an investor. The only thing is somebody that does not want to be online 24/7, just want the system to do the automated trading. But as you that love monitoring your profits, you can just do DCA. And that is the only thing that we call the trader's part. So how do you do that? And that is going to be in your settings. Everything about crypto trading is about your foundation, your system, and you stick with it. You see, there is no perfect way to trade crypto. Though there are better ways to trade crypto, but there is no perfect way. There's something we call trend. The trend might move seriously, you understand, and the next thing you see, it moves also seriously, like this, or it's just like this, not really making much up or much downfall. So that is crypto for you. It's all about trend. What's giving you money this week? To next week might slow down a little, or even in the next 2 weeks might just slow down, or might just put you into another shit. So that's crypto for you, no perfect way. But we are saying a trader's way, because this will guide you. This will guide you to always be in the market. And this particular training is for everyone that has huge capital. That means if you have above $300, probably above $500 to trade with, because it limits the amount you'll be trading with for a future purpose. Now, our system, let's make use of our calculator. Our system is going to be using 1%. 1%. So, assuming we have $1,000, you multiply this by 20, sorry, by 20, because we are using 20x, the leverage. Okay, and we'll look for 1% of this times 1% of this. So $200. Oh God. So we are trading with $200 here. Mm. We are trading with $200 here, despite the fact that we have $1,000. Okay. So how many coins are you trading? Probably most people with $500 trading capital would have subscribed for at least $500 bought, or those with 1,000, 1,005 would have at least subscribed to either 500 bots, $500 bought, or $1,000 bought. But let's assume you are with $1,000 bought. That is times divided by 7. So divided by 7. So that simply means, despite your $1,000, you'll be trading about, you just make this approximately, you can approximate this to 30. Yeah, you can approximate it to 30. Okay. So that simply means that you will be trading with $30. You understand? $30. Okay. Yeah. Okay. $30 approximate. Or you can just put it to $29 to be on the safer side. $29. Okay. That makes sense. But it simply means it's low. That means you have a low capital. Like, oh God. Uh, You see, in the actual sense, if you're trading as a trader, because you're not expecting to do anything, just leave it, let it run, whatever it wants to run. In this case, you might be trading times 3. That is one, let's say 30 times 3, that is 90. Mm. That could have been more awesome, more profit. But here you're trading 30. So you need to understand why. That is because I intentionally left this trade for you so that you can see on this training. So this is a trade that has been occurring for 6 days, so that you don't have this kind of trade. It's not like it's not still possible depending on how strong the trend is, but it will limit this kind of trade. So you have to, there is always a sacrifice and there's always a system in trading. So the system is this: instead of you to actually wait for, let's put it this way, uh, okay, we'll get there. We'll get there. So, in a nutshell, so you're trading 30. That's what you put in the market, and you're trading 5 coins. You understand? You're trading 5 coins and 30. So let's come to our robot and say, hmm, what do we want to say here? So number one, this is going to be 5. Okay. The leverage, you're going to put this on. You're going to put short on. We're trading short most of the time. This is 5 because it is 5 because, what do we call it? You are on a $500 bot. But if it is on a $1,000 bot, it's going to be 7. Okay, it's going to be 7. If you are on a $1,000 bot, it's going to be 7. And if you are an $100 bot, it's going to be 3. So we put in 7 here. Okay. Okay. Now, what else? What else? What else? What else? What else? So leverage is 20. Okay. Then the amount here is going to be 30. Okay. The amount here is going to be 30. Okay. Or you want to put it to 29. You understand? Now, auto margin, auto maintain margin, fine. Then mitigate, no, not for now. Mitigate could have been an auto system for those who are trading, manually. We'll get there. Okay, Sharia could be on, could be off. The difference between a Sharia being on or Sharia being off is this: when you put on your Sharia, that means you're talking about trading a coin that is. I used it in my last voice, in my last training, when I was talking about, when I was talking to the traders, as in the so-called investors. I used the word stable, like stable coin, and I've seen a lot of attack, and they are correct, but They weren't looking at my contest. They were looking at my words. Everybody wants to claim to, know better. One thing about when we're coming up, you see, when a teacher makes a mistake, it's always very, very pronounced. And, the student wants to correct or make jests behind. Is it that they make jest or they correct, like, no, ma, it's this, so that at least you know that you are better than the teacher in that part. But that teacher would now set an exam and you will not pass that exam. Why? Because you don't really know. It's just that you are able to pick points that issue. Well, when I was saying stablecoin, I wasn't using the word the crypto terms. What I was trying to say is a coin that is stable in nature. Like, I'm not saying static. I keep wondering. I keep wondering English and terms. Even stablecoin simply means coins that doesn't change, like USDT, USDC, BUSD, and so on. Those are stablecoins in crypto. But when I meant stablecoin, I mean a coin that has low volatility. And the word low volatility is only known by crypto traders also. So I was looking for a word that, a layman can understand. That means a coin that has no huge movement. A coin that his head is correct. A coin that has been in market for a very long time or has a stable nature. You understand? So when you put on your Sharia, you might not be seeing huge floating loss, but at the same time, the connectivity of profit might not be as fast as when you put it off. So in crypto, the more the wahala, the more the money. The more the headache, the more the money. And the lesser the headache, the lesser the money. So which one do you want? Is it the headache and money? Because anything that gives you huge money will give you huge headache in crypto. In all financial games like forex and so on. That is why they said those who can take the risk more are those that are making the huge money. But you can make a lot of money today and it diffuse tomorrow. So that's it. So when you put it off, you will see a lot of shit coins that will be traded. It's not, and when you put it on, you can see mean coins that will be traded, but they are not coins that will give you huge headache. You understand? But when you put it off, you might see a lot of coins, that will give you a lot of headache. That's it. Now, put it off or on, depending on you. The more the money you will be making, the more the transactions that comes in when you put it off. But when you put it on, the lesser, because most coins might be a little bit sluggish in nature. You understand that you'll be trading. Yeah. So it now depends on you. Whichever one, you know the consequence. So choose wisely. And here you come to the profit. What this simply means is the system is checking for 5 profit for you. The first one is the least that you want the system to take. Most of the time we put this to 30 because you're trading low, put it to 30. The second one, 40, 50, then 70, then you can put this to 100 at least. You can put this to 100. Now, what does it mean? It simply means when you make 30% profit per trade, the system would lock it such that when the trade goes the other way around, trade is like this, like this. So when it gets here, when it gets here, it locks it up. So, and, it's still going this way. When this one gets here, it locks it up. So when this now try to come down and it gets to this level, it sells the last one. So it's only preventing you from going beyond 30%. So when it is 30% profit, it locks it. So if it keeps going and it gets to 40%, it locks it again. It keeps going, it goes to 50%, it locks it again. So it keeps locking so that the trade does not go beyond the last one. So that's that. Now, and you save. That's all. You save. So immediately you save, your trade starts, especially when every other thing is done. You understand? So that's that. Now, after doing this, you remember that we only used 1% of our trade. Okay. So this is where we go. Now you come to trade. You come to your trade. Okay. You come to your trade. Now, what you're watching now is this. What you'll be watching is this. When you trade, if your Sharia is on, when your trade is between 250 to 500, you might probably buy more. And you can do this 2 times. You understand? So the first one could be between 200 and 500. If your Sharia is on, between 200 and 500. So if this percentage is 200, that simply means this is 20% deep, because 5% will give you, nope, no. If it is 200, that is 10% deep. It's 10% deep, because 5% deep will give you 100. You are trading 20x. 5% deep will give you 100. Okay. So let's do this. When you're on Sharia, when it is 150, that is about 7.5% deep, yes, to probably 300, you do your first buy, because you can still buy twice. Okay, so you do your first buy. When it is between 150, you do your first buy. So and when it can sell out first, and that's the purpose, to sell out first. But if it keeps going the other way around again, so you have to wait. The last one you want to buy twice. The first one, when it is between 150 or probably 150, 150 what? 150, 300. Okay. And you can just wait for 200, but 150 is okay. 150, 300, you buy the first time. Then the second time has to wait, really wait, and be sure that there is a serious dip to take you out. So the second time you want to buy, you want to wait for it to go to 250 to 500. You understand? The reason why you're buying this fast is because you're still checking if you can, break that gene and make it sell fast. That is number one. And number two is to put more money into the market, because when you're putting in little, you're putting in about $30. Profit on $30 is little. I said little. So, and you have to buy more. If you're buying more, you're buying 100%. So this makes it 60. So that simply means that $60 is in the market, and it gives you more profit. You understand? There's going to be more profit on that. So that's that. So how do you now buy? What you need to do is this plus. You click on this plus. Then you click on this 100%. That means what you have in the market, in the trade, is this. So you want to increase it by 100%. What we will be having is 30. So you want to increase it by 100%. So it makes it 60. You understand? So the next buy again, so 60 is in the market, you want to increase it by 100% again, so 120. But don't do this until you're sure the market is really against you. That means between 250 and 500. So that's that. So that's a strategy. Another strategy is this. You can as well wait for that coin to probably go from 250 to 500. Okay, so when it goes between 250 and 500, probably you want to wait till it really goes to 250, 500. Then you buy 200% once. So when you have buy 200%, it will really cut it down a lot, and it will take this, assuming this is 300. I think it will take it to 100% or thereabouts, and that's 5% from about 15% to 5%. Yeah. So you can do this, but I prefer the first one to be on the safer side so that there is also you're not just doing every at once. There's still the opportunity of redoing again. You understand? And like I said, this is for high capital. It's for people with 300 and above, but I suggest more than 500 and above is better because the first trade is going to be having a little in it. And, if you have low capital, you are still putting very little into the market, it might not go well. You understand? So it is better for you to have high capital to do this. So now, I'm canceling this. So this would make you sell very fast, very, very fast. This will make you sell very fast. So that's the essence. And I think we've explained that all. So we're waiting. Okay. The other one is if Sharia is off. That means if Sharia is off, you have to wait for the coin. If Sharia is off, you have to wait for the first buy should be around probably 350, 400, 350 to probably 700. The first buy, while the second buy should be between 500 and 1000. You understand? 1000. Okay. So the second buy should be within 500, 1000. The first buy should be within 350, 700. Because those, when Sharia is off, you see high percentage of, opposite. But we are trading negative, we are trading short. So most of the time because most of those coins will always drop. But there are some that are, that are not funny in nature that would always be going high, 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 high. You understand? So that's that. What else do we say? I think that's all we want to see on this particular kind of system. So this system makes you be in trading every now and then. You don't wait and wait and wait. You're selling out. You're selling out. You are selling out. And if you want to stop a trade, which is not advisable, you click on the times and you want to ask how much do you want to stop? Is it the entire money? Is it 100% of the trade? Is it 25% of the trade? Or what are you selling out? So it depends on you and you click confirm. So thank you very much. My name is Prince Yemi Kasali. I hope this is helpful. Thank you.